Hello and welcome to Finance. Lesson 1, Solving ALOE-based Equations. My name is Aryan. So we're going to start by solving some cash flow interpretation of ALOE equation and its breakdown equations, calculating owner's equity, net working capital, and operating cash flow. Question 1. If your current assets are $560, current liabilities are $962, net fixed assets $6,415, and you have long-standing debt of $1,325, what are the values of owner's equity and of net working capital? First, we're going to write out all the givens, and then what we want to solve for. So our givens are current assets, $560, current liabilities, $962, net fixed assets, $6,415, long-term debt, $1,325. Our wants, we want to know what owner's equity is equal to, and net working capital. Step 2. Now that we have our givens and wants, we want to identify the necessary equations that relate the givens to the wants. So in this case, we start with the ALOE equation. Assets, A, is equal to liabilities, L, plus owner's equity, OE. We can also say total assets is equal to total liabilities plus total owner's equity. In this example, they give us only two asset accounts, current assets and net fixed assets. So if we sum them together, we get our total assets. Liabilities, they give us current liabilities and long-term debt. These come from the balance sheet. These add together to get the total liabilities. And then we leave owner's equity as is. So that's the equation that we're going to use to solve for owner's equity. The equation that we're going to use to find net working capital is simply net working capital equals current assets minus current liabilities. So step 3, we plug in the values and solve for the unknowns. So from step 2, we had current assets plus net fixed assets equals current liabilities plus long-term debt plus owner's equity. Rearranging that equation, we can solve for owner's equity. So owner's equity is equal to current assets plus net fixed assets minus the sum of current liabilities and long-term debt. So plugging those numbers in, 560 plus 6415 minus 962 plus 1325, you get 6975 minus 2287. A total of 4,688. So that's our value for owner's equity. And that's net working capital. We said was current assets minus current liabilities. So that's simply 560, which is our current assets, minus our current liabilities of 962. And that will give us a negative 402. Okay? Question number 2. The 2013 balance sheet of SI Rocks, Inc. showed $3.45 million in long-term debt, $865,000 in the common stock account, and $7.3 million in the additional paid-in surplus account. The 2014 balance sheet showed $4.5 million, $999,500, and $9.75 million in the same three accounts, respectively. The 2014 income statement shows an interest expense of $350,000. The company paid out $713,000 in cash dividends during the year 2014. The firm's net capital spending for 2014 was $810,000, and the firm reduced its net working capital investment by $342,000. What is the firm's 2014 operating cash flow, or OCF? Okay. Again, we want to write out all the givens and the wants. There's a lot of givens in this case because it's a very long problem. But if we separate it, we see that some items come from the balance sheet and some come from the income statement. So if you recall your accounting principles, balance sheet it shows a beginning year and an ending year. The income statement is for one complete year only. Okay, so reading through the question again, we can pull out all the essential variables that our givens are and put it in a nice little table here. So beginning in 2013, we have long-term debt $3,450,000. Common stock, $865,000. Paid in surplus, $7,300,000. In ending year, still goes on the balance sheet, $4,500,000, $999,500, and $9,750,000. Okay? And then the other numbers go on the income statement. So that would be the interest of $350,000, dividends of $713,000, net capital spending of $810,000, and the change in net working capital. Now this one is a little tricky. It's negative $342,000 because in the question it says, and the firm reduced its net working capital investment. Because it's reducing it, we're comparing 2 years. So that's net working capital of the ending year in 2014 minus net working capital of the beginning year 2013. So since they don't give us those individual numbers, they're talking about a change. We're talking about the change in net working capital. And because it says reduced, it will be a negative value. Okay? And then the question asks, what's OCF, operating cash flow? Step 2, just like in question number 1, we did identify the necessary equations that relate the givens to the wants. So in this case, we're going to use the ALOE equation again. Assets equals liabilities plus owner's equity, but we're going to relate it a little differently. So we know that because in finance we're talking about cash flows, we're going to talk about cash flow from assets is equal to cash flow to creditors. Those are the people we owe money to, that we borrow money from, and then we owe them back, the principal and some interest, plus the cash flow to stockholders, which is the people who would borrow, who we issue stock to. They buy the stock, and then we pay them dividends. Okay, 2 different forms of investment there. And so then we break these down. Cash flow from assets is equal to operating cash flow minus net capital spending minus the change in net working capital. Cash flow to creditors is just interest minus net new borrowing. Net new borrowing is the difference between your long-term debt, as you see in the following equation, the one below. Cash flow to stockholders is dividends minus net new equity. Again, net new equity is the difference between your stockholders' equity in the ending year minus that of the beginning year. And stockholders' equity in this case includes both common stock and paid in surplus. So we have these formulas here. The final formula we're going to use is OCF minus net capital spending minus change in net working capital equals interest minus parentheses long-term debt ending minus long-term debt beginning plus parentheses bracket plus bracket dividend minus parentheses common stock of the ending year plus paid in surplus of the ending year close parentheses minus open parentheses common stock beginning plus paid in surplus beginning close everything. Okay. Now we get to plug in all the formulas, or all the numbers into the formula. Well, first we can solve for OCF to make it a little bit easier ourselves, keep it the variables. And then we plug in, and the final result, we get a negative $2,103,500 as our operating cash flow. Okay. Now here's the fundamental equations we use in these 2 problems. Total assets equals total liabilities plus total equity. Cash flow from assets equals cash flow to creditors plus cash flow to stockholders. OCF minus change in net working capital minus net capital spending is equal to interest minus net new borrowing plus dividends minus net new equity. This breaks down further into the equation that we actually used. EBIT plus depreciation minus tax, minus all that, the changes in net working capital. And you can take a look at this. And this shows the breakdown of the ALOE equation from question number 2, the cash flows aspect of looking at the ALOE equation. Okay? If you have any questions, please go to fau.edu/tutoring and follow the directions listed to schedule an appointment with a friendly tutor to give you more detailed assistance with these and other concepts. Thank you. I hope you do well in your studies, and take care.